Hey there, savvy investors and homeowners. Welcome back to the Investing Iguana channel, where we simplify the complex world of finance and investment for you. I'm Iggy, your guide to navigating the ever-changing financial landscape in Singapore. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers. Today, we're embarking on an enlightening journey into the core of Singapore's Budget 2024. This budget has far-reaching implications for various stakeholders in the property market, including property developers and homeowners. If you've been wondering how these new budget measures will influence the property market, or what it could mean for your personal investment or living situation, rest assured that you've come to the right place. Our aim is to unravel the complexities of Budget 2024 together. We'll explore its impact on our diverse community of developers and homeowners, shedding light on the various ways it could affect us. We'll be providing insightful analysis and practical tips, so stay tuned for those. Singapore's property landscape has recently undergone significant changes. These changes have had a profound effect on different segments of the market, including singles aged 55 and above, property developers, and homeowners. We'll delve into these updates, breaking them down into simpler, more understandable terms. By doing so, we hope to provide a clear picture of how these changes are impacting different segments of the market. In this exploration, we'll be taking a close look at the new policies, understanding their intended effects, and discussing their potential implications. We'll also be offering some tips and strategies for navigating these changes, whether you're a developer looking to understand the new regulatory landscape or a homeowner trying to make sense of what this means for your property. For single Singaporeans aged 55 and above. For single Singaporeans aged 55 and above, the government has introduced a specially designed concession. This concession is aimed at helping single buyers, which includes individuals who are divorced, widowed, or have lost their partners, transition to smaller properties. This group often finds smaller living spaces more manageable due to their life circumstances. While the immediate impact on the private residential market might appear modest, given the relatively small size of this buyer group, it's important to note that the significance of this demographic is expected to grow in line with Singapore's aging population. This means that the effects of this policy could become more pronounced over time. Interestingly, the real beneficiaries of this policy could be older resale properties. These properties might not have been very attractive in the past due to their dwindling lease periods and the perceived lower potential for capital appreciation. However, with this new policy, they could become more appealing to buyers in this demographic. Furthermore, this policy adjustment might influence some potential buyers to consider smaller, older resale condos instead of 4-room HDB resale flats. The latter have been popular for bypassing the mandatory 15-month waiting period. This shift in buyer preference could potentially ease the demand for million-dollar 4-room resale flats, a trend that saw a significant surge last year. In essence, this policy change could bring about a shift in the property market dynamics, particularly benefiting older resale properties and potentially easing the demand pressure on certain segments of the market. It's a fascinating development that underscores the government's commitment to addressing the unique needs of different segments of the population, particularly as the demographic landscape evolves. So, whether you're a single Singaporean aged 55 and above, or someone interested in the property market dynamics, these changes are certainly worth keeping an eye on. Let's continue to explore and understand these changes together. Developers' perspective. In the current climate of rising interest rates and ongoing cooling measures, developers are facing challenges in offloading their residential projects within the stipulated timelines. The recent deceleration in new home sales further underscores the market's cautious sentiment amid macroeconomic uncertainties and tepid employment outlooks. The latest policy adjustments offer developers a slightly extended window for selling off their inventory, allowing for more creative marketing strategies or alternative solutions for clearing unsold units. Although the impact of this change might be subtle, since many developments are already sold out by the ABSD deadline, it's a welcome relief, particularly for luxury projects that have felt the sting of heightened ABSD rates, especially the 60% levy targeted at foreign buyers and investors. Homeowners and annual value adjustments. From the perspective of developers, the current economic environment, characterized by rising interest rates and ongoing cooling measures, presents a challenging landscape. Developers are finding it increasingly difficult to sell their residential projects within the stipulated timelines. This difficulty is further highlighted by the recent slowdown in new home sales, which reflects the market's cautious sentiment in the face of macroeconomic uncertainties and less than optimistic employment outlooks. The latest policy adjustments, however, offer a glimmer of hope. These adjustments provide developers with a slightly extended window for selling off their inventory. This additional time could pave the way for more creative marketing strategies or alternative solutions for clearing unsold units. It's an opportunity for developers to think outside the box and find innovative ways to attract buyers. While the impact of this change might be subtle, given that many developments are already sold out by the additional buyer's stamp duty (ABSD) deadline, it's a welcome relief. This is particularly true for luxury projects that have been hit hard by heightened ABSD rates. The 60% levy targeted at foreign buyers and investors has been especially painful. So, even though the immediate impact of these policy changes might not be dramatic, they offer some breathing room for developers. They provide an opportunity to adapt and innovate in response to the challenges posed by the current market conditions. This could lead to interesting developments in the property market, and it's something that both developers and potential buyers should keep an eye on. Let's continue to explore these changes and their implications together. It's a complex landscape, but with careful analysis and understanding, we can navigate it successfully. In summary, Singapore's Budget 2024 has introduced nuanced changes across the property sector, each with its unique set of beneficiaries and implications. Whether you're a senior citizen looking to downsize, a developer navigating a sluggish market, or a homeowner grappling with tax adjustments, these changes herald a reshaping of Singapore's property landscape in the coming years. And that wraps up our exploration of Singapore's Budget 2024 and its effects on the property market for developers and homeowners. Whether you're planning to invest in new developments or wondering how your home's value might be affected, it's clear that these changes will have significant implications moving forward. If you found this video helpful and informative, don't forget to hit that like button and subscribe to the Investing Iguana channel for more updates and insights into Singapore's financial and property markets. Have any thoughts or questions about the budget's impact? Drop a comment below. We love hearing from you and fostering a community of informed investors and homeowners. Until next time, keep making smart investment choices and stay savvy, my friends.